Good Wednesday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 780 KOH. It's a pleasure to be with you on this hump day and a pleasure to tell you it was a good day in the market. Oh, yeah. I hope you had a great day today. Let me tell you what I have in store for you. 10 things you must do 1 year before retirement. That's right. You heard me correctly. It's a laundry list. You have to get these things done to have a successful retirement, right? You just don't stumble into retirement. It's something that's been planned for years and years. But what I see happen a lot is people get into that last year, right? You set that deadline. Oh, February of 2027. That is my time. February 1, I am done. I'm out of here. And you're so excited about it. And then you forget to do some very, very critical things. And all of a sudden retirement happens. And you're like, uh-oh, I forgot to do this. Forgot to check on that. Well, let's make sure that doesn't happen to you. Because I've put together my personal 10 things you must do in the final 12 months before you retire. So that's the topic that I'm going to get into with you. But first, let me get into the stock market side of things today. Well, as I indicated, it was a strong day today. Just more of the same. Rotation back into the AI names, back into the software names, so on and so forth. Again, everything that everybody was so worried about on Monday, yesterday and today, no concerns whatsoever. And that's what fed the frenzy. 308-point gain on the Dow is how we finished up, a 0.63% rise to 49,482. NASDAQ gained 288 points, 1.26%. S&P up 56 points, or 0.81%. So like I said, nice and solid. You tack that on to yesterday's gains of 370 on the Dow, 236 on the NASDAQ, and a 52-point rise on the S&P. And we put together two very powerful sessions in the last 48 hours. But the market was highly anticipating two extremely important reports today. Those reports, NVIDIA and Salesforce. And boy, did we get some numbers from those companies. So I want to jump into those and let you know what the stocks are doing in the after hours, because most likely many of you own those names in your portfolio. I'm sure you're anxious to hear how your companies did. So I'll get that going, hit the commodity side, tell you what some of the big movers in today's market action was, and then we'll get into our topic again. 10 things you must do 1 year before retirement. Okay, let's bring you up to date on NVIDIA, right? Name again, probably in your portfolio. So here's how the stock did in the regular session. Finished the day up $2.71, 1.41%. Closed at 195.56. Right now in the after-hours session, tack on another $1.86 or 0.95%. Now trading at 197.42. And folks, what an earnings report this company had. It was pretty remarkable. I think it came in significantly above many of Wall Street's expectation. And I'm going to go a little bit deeper than I normally do when I give you an earnings report, because this stock, of course, is a barometer, right, for what's going on in AI technology, data center spend, so on and so forth. So I want to go a little bit deeper, hence why I'm jumping right into NVIDIA and sharing with you what's going on there. So again, this was a very important report after, like I said, the sell-off that we've experienced, not yesterday, but the prior few days in the whole AI related space. And I hopefully after this report, hopefully nerves are going to be calm quite a bit, because, NVIDIA is any indication of everybody else, which they're not. They're in a class all of their own. I think we're going to be just fine. But here we go. Let's get down to this. So first of all, it was much better than expected fiscal fourth quarter results, driven by 75%. That's right. You heard me correctly. 75% revenue growth in its core data center business. Here's how the company did. Earnings per share came in at $1.62. Estimates $1.53. Revenue $68.13 billion. Estimates $66.21 billion. Total revenue for the quarter climbing 73% from $39.3 billion a year earlier. The company now gets over 91% of its sales from its data center unit, which of course houses its market-leading AI chips. Speaking of the data centers, how'd they do? Data center revenue came in at $62.3 billion for the quarter. That was ahead of expectation of $60.69 billion. Net income just about doubling. $43 billion for the quarter, about $1.76. That was an increase from $22.1 billion, or 89 cents a share in the same quarter a year ago. Guidance, much better than expected also. NVIDIA said revenue for the fiscal first quarter will be $78 billion plus or minus 2%. Analysts were only looking for $72.6 billion. NVIDIA said it's not assuming data center revenue from China in its forecast. The stock, of course, is outperforming all of its mega cap peers so far this year. As of today's close, the shares are up 5% this year. NASDAQ is down 0.4%. The only other company in the $1 trillion club right now to show gains this year is Apple, which is up less than 1%. All right. In the CFO commentary, NVIDIA said hyperscalers remained our largest customer category. That was a quote, accounting for just over 50% of the data center revenue. Within the data center business, NVIDIA reported $10.98 billion. Think of this. This is only in it for a quarter, folks, when I'm talking these numbers. Think of that. 3 months. Reported $10.98 billion in sales for the company's networking parts, which are used to connect hundreds of graphic processing units, what we call GPUs. Those sales were up 263% year over year, reflecting very strong adoption of the company's NVLinks networking technology, as well as its Spectrum X Ethernet switches, with new deals from the likes of Meta. Their gaming unit, which used to be the biggest, recorded revenue growth of 47% from a year ago, bringing that number to $3.7 billion, but fell 13% from the previous quarter. Analysts have speculated that NVIDIA may skip the launch of its new gaming GPU this year, as memory constraints are forcing chip makers to prioritize AI processors. Memory has been an area of potential concern for investors because of global shortages. Company expects supply constraints to be a headwind in NVIDIA's gaming business in the first quarter of fiscal 2027 and beyond, according to their finance chief, Colette Krause, who wrote that in her commentary. Now, excitement has been building for the upcoming release of NVIDIA's next-generation Vera Rubin, which is a rack-scale system, the successor to Grace Blackwell, later this year. Ms. Krause said on the call today that they shipped our very first Vera Rubin samples to customers earlier this week, and we remain on track to commence production shipments in the second half of this year. Vera Rubin is expected to deliver, listen to these numbers, 10 times more performance per watt, providing energy efficiency at a time when data centers face major power constraints. And if you watch the president's State of the Union address last night, he's basically telling these tech companies, listen, you got to produce your own power. Company said it's expanding its supply chain way beyond Asia, where it's concentrated, and it's moving into the U.S. and Latin America. So that's going to put a smile on the president's face. NVIDIA now makes its Blackwell GPUs at Taiwan Semiconductor Manufacturing Company new chip fab plant located in Arizona, and some of its rack cell systems are assembled at a large new Foxconn plant in Mexico. Quote, these moves are expected to strengthen our supply chain, add resiliency and redundancy, and meet the growing demand for AI infrastructure. Our ability to increase manufacturing capabilities will depend on the local region's manufacturing ecosystem, capacity to ramp production supply to the required volume on a timely basis. How about the automotive side of the business? That includes chips for cars and robots. NVIDIA reported sales of $604 million for the quarter, up 6% from a year earlier. But that was one of the few parts of the report that came in below expectation. Expectation was $654.8 million, and again, they did $604 million. For its professional visualization business, NVIDIA reported revenue of $1.32 billion for the quarter. That was an increase of 159% year over year, and ahead of Wall Street's expectation of $755.4 million. They've been pouring big chunks of money into AI labs and other companies in the industry, including taking a very large stake in chipmaker Intel. Company said in their annual filing that it invested $17.5 billion in private companies and infrastructure funds this year, quote, primarily to support our early stage startups. Those investments may not become profitable in the near term or at all. There can be no assurance that we will realize a return on our investment, they said. Jensen Huang, the CEO, of course, told analysts today on the call that NVIDIA continues to work with OpenAI toward a partnership agreement and believe that we are close. The two companies announced a $100 billion deal in September, but that deal has yet to finalize, and that's been one of the criticisms. In its quarterly filing today, NVIDIA noted that there are no assurances that a transaction will be completed. So again, overall, very, very strong report. It's the best way you can summarize it. To be honest with you, I'm a little shocked that the stock is not doing more in the after-hour session. Again, they hit on all 8 cylinders and even more. They hit a home run in many aspects of the report. But why is the stock not moving up anymore? You got to remember, folks, NVIDIA, in Wall Street's eyes, is priced for perfection. They have to hit all their numbers. I mean, come on. When a company reports a 75% revenue growth and the stock's only up, less than $2, it tells you either the stock's getting expensive in investors' eyes or that the street wanted more. Well, I told you what the estimates were. They blew past on just about every aspect of it. So why isn't the stock moving higher? That's got me a little bit concerned. We'll see, of course, what happens overnight and into the pre-market and then the opening bell tomorrow. But with those type of numbers, you would think the stock would be up significantly more, $4 or $5, $6. I would not surprise me. But to be up a little over $1, that doesn't impress me that much. But great job by NVIDIA. Just, again, incredible numbers overall. All right, speaking of numbers, well, I wish I could say incredible, but they weren't. Let's hit the other big earnings report after the close, and that'll be CRM. Of course, Salesforce, a Dow Jones Industrial Average component, just like NVIDIA is. Then we'll get into our topic, 10 things you must do 1 year before retirement. But let us turn it over to my dear friend, Kristen Snow. She's in the Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. Happy Wednesday to all of you. Again, a good session today. Finished up 308 on the Dow. The NASDAQ rose 288. The S&P higher by 56. So it's been a nice 2 days of trading sessions by all means. All right, so the highly anticipated earnings numbers out of NVIDIA and CRM Salesforce, of course, came out after the close. I just shared with you what NVIDIA did. Now it's time to move over to Salesforce. Once I'm done with that, I'm going to move into our topic, 10 things you must do 1 year before retirement. All right, so let's hit these numbers on Salesforce. Okay, let me tell you what the stock did in the regular session, tell you what it's doing right now in the after hours. Regular session finished up $6.33, a 3.41% gain to $191.75. Right now in the after hour session, it is down $9.65, 5.03% loss to $182.10. All right, these numbers I'm going to share with you are going to kind of sound like chump change after going over NVIDIA's monstrous numbers, but this is kind of more of a normal company. Okay, so keep that in mind. So the company reported overall, fairly healthy results, but we missed on some of the analyst expectations. So here's how we did. $3.81 is what they made on a earnings per share basis. Expectation, $3.04. Revenue, $11.2 billion. Estimates, $11.18 billion. The revenue grew 12% year over year in the fiscal fourth quarter, which ended January the 31st. The company has now seen the company's fastest growth rate in 2 years. The company also allocated $50 billion for new share buybacks, quote, because these are some of the lowest prices we've seen, according to their CEO, Mark Benioff, on the conference call today. Salesforce, by the way, down about 28% as of today's close so far this year. S&P's up about 1%, so definitely lagging. Net income for Salesforce, $1.94 billion or $2.07 a share. That was an increase from $1.71 billion or $1.75 a share. Adjusted earnings per share excludes stock-based compensation expenses, amortization of purchased intangible assets, and, of course, restructuring costs. Now, this is interesting. We always like to get this number, and this is forward-looking. So this is revenue the company is anticipating in the future, but they have not yet booked yet. This is called current remaining performance obligation. And what it is, it's a sum of all the contracted but unrecognized revenue and unbilled amounts that will be recognized as revenue over the next year. That number sitting out there that they did not, again, include in this last earnings report, came in at $35.1 billion. The street was looking for $34.53 billion. So that's a good number to look forward to. Guidance for the fiscal quarter included somewhere between $3.11 to $3.13. Analysts were looking for $3. So the guidance, much better than expected. The guidance for adjusted earnings per share between $11.03 billion to $11.08 billion. Wall Street was only looking for $10.99 billion. During the quarter, they released an AI-embedded Slack bot assistant in its Slack team communication for apps for paying clients. Company also completed its $8 billion Informatica acquisition. They announced plans to buy the marketing company Qualified. Informatica, by the way, again, a data management software company, contributed $399 million in revenue for the quarter to Salesforce. Hey, not bad. Company now sees $63 billion of fiscal 2030 revenue, up from a target of over $60 billion it presented back in October. 5 customers of ServiceNow moved to Salesforce's competing products for information technology service management during the quarter. Company's been working to expand its adoption of Agent Force AI technology for automating customer service and other corporate functions. The company said annualized Agent Force revenue now has exceeded $800 million in the quarter. Company also said they're seeing a benefit from the investment. Remember I told you NVIDIA's investing in a lot of private companies? Well, they all are, Salesforce included. They said they're seeing a big benefit in the stake that they've put into Anthropic, generating $811 million in gains for the quarter. That's up from $96 million a year ago. Benioff said the following. He says, I think we just put another $100 million into the new round. We're at about $330 million into Anthropic. It's almost about 1% of Anthropic. And believe me, I wish we had invested more. I bet they do. I bet they do. So overall, not a bad report. Stock, like I said, is reacting, I think, the way that it should be. It was not great, no major disasters, but, it's kind of okay. So just something, again, we're going to continue to watch that. Will weigh on the Dow unless it changes overnight. Yeah, let's hit some of the other big movers in today's action. App 11, which it's been app hating for the last few days, but last couple days it's been app 11. $28.70 rise today, 7.3% to $421.93. Snowflake, which reported numbers after the close, did good in the pre-market session or in the regular session. Let me see how the company is doing. I didn't get a chance to look at detail of the earnings numbers, but let's see. Up about $4.12, 2.5% in the after hours. So numbers must have came in pretty good. So it was a big performer today, up $8.15, 5.06% to 169.21. Workday turned early losses into some very nice gains, 2.25% rise there, $2.93, 133.16. Netflix was a good performer, up nearly 6%, $4.66. So we saw pretty good strength in the consumer discretionary sector. Amazon tacked on $2.08, about a 1% increase there. The home builders. This was a tough go today, and it was nothing to do with the home builders, but it all had to do with Lowe's. Lowe's reported numbers. Previous quarter was good. Guidance was terrible. That prompted concerns regarding the housing sector. So Lowe's itself down $15.57, 5.59% loss to $263.02. But taking a look at my list of local home builders, they got hit pretty good. And this is going to include a little bit of after-hours action. But D.R. Horton down $7.20. KB Homes, one of the better ones, up down only 45 cents. But Toll was down $2.52. And Lennar, this was a big loss here, $6 loss, 5.15% to $110.40. Let's see. Financials were strong today. Citigroup up $4.78. Capital One up $9.17. Coinbase higher by $21.91, about a 13.5% gain. Robinhood was also strong with a increase there of 5.64%, or 4.14% to $77.53. So there's kind of where it was, right? Very much centered on technology once again, but weakness in the home building space. Again, no problems out of those companies, but Lowe's has said they're seeing a slowdown in the housing and housing spending, et cetera, and that just carried right on over into the housing sector. All right, let's hit the commodity side of things. 19-cent loss on oil, $65.47 a barrel. Another good day for gold, $49.80 rise to $5,226.40 an ounce. And we barely budged in the bond market. 10-year Treasury yield up 2 basis points to yield 4.05%. All right, so let me give you about a minute head start on our topic. Once again, 10 things we must do 1 year before retirement. So keep this in mind, folks. You hear us talk a lot about the 5-year window before retirement. That's really what we call macro planning, right? You're looking out 5 years, sometimes feels like an eternity, but we know the older we get, the faster that 5 years goes. But let me tell you, when you get down to that 1 year mark, it's a whole different ballgame. Let me just give you one brief example. Let's say you've got $1 million portfolio and you're 5 years away from retirement and you suffer a 10% loss, $100,000. Ouch. Yeah, it hurts. Not the end of the world, though. because we know that markets work in cycles. Generally, they'll go up for 3 to 5 years, down for 3 to 5 years. We haven't had a 3 to 5 year down cycle since I can't even remember now. But that's historically how the markets work. But what if you are 1 year away from retirement? You've got that same $1 million and you suffer a 10% decline. Well, that means you're going to have to make close to 12% just to get back to where you were before that market decline. That's pretty tough to do in 1 year. The guy that's got 5 years, the gal that's got 5 years, most likely he can do that. The guy or gal that only has 1 year, pretty tough. So now you start questioning yourself and go, oh, I had $1 million. Now I've got 900,000. Can I really afford to retire? Well, think about this for a second. If you're going to use a 6% withdrawal rate on $1 million, that's $60,000 a year. But if your account's now only worth 900,000, 6% is what, 54,000? That's $6,000 less for the year, or about $500 less per month. Believe it or not, folks, that $500 can be a make or break in a retirement decision. It really can. A lot of people don't have a lot of discretionary money. People always think, oh, my neighbor or my friend's got $1 million or a couple million. Yeah, but what are the income sources, right? What are the income sources? So when I come back, I'm going to start with my first point, which is know your real monthly number. Let's turn it over to Jack Saban. He's got news, traffic, and weather. Hello, Jack. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. All right, once again, we finished up 308 on the Dow Jones Industrial Average, 0.63% to a close of 49,482. NASDAQ rose 288, 1.26%. S&P higher by 56, or 0.81%. Well, unfortunately, I got to deliver to you some bad news. I told you earlier that I was very surprised that the stock of NVIDIA was not moving up higher after that strong earnings report. And we had, a little over $1 gain, almost $2 to be exact. When I told you that right at the beginning of the show, well, we're starting to give all that up. We're now negative $1.58 in the after hours on NVIDIA, down 0.81%. Again, closed at 195.56. Now it's trading at 193.98. So that's not a good sign there that they're bailing on it in the after hours session. All right, let's get into our topic. 10 things you must do 1 year before retirement. All right, I'm going to start with number one, as I said. Know your real monthly number. And I'm not talking guesses. I'm not talking hopes. What is your actual retirement spending number? Folks, out of probably thousands of financial plans that I've written over my career, I bet I could count on one hand how many people, when they came to my office, knew what their real number was. And frankly, that's why they came to us, right? They wanted to know what their real number is, and we put them through our budgeting process and our cash flow material, and we come up with that number. But a lot of times, again, people will go, I think it's this, maybe it's that, but I really don't know. Well, if you don't have an advisor that can run those numbers for you, contact us, please. Or if you're self-managing, you probably shouldn't be if you don't know what your number is. Because as I've said so many times on this program over the years, remember, it's not the size of your account, it's the cash flow that it's going to produce. I just had a great call today with a future client, and we start talking about these numbers, right? And it's mind-boggling to think what a person needs these days to retire. Just on the show yesterday with Aaron and Dwight, just the homeowner's insurance now for many people, even if you're debt-free. What I see is for husband and wife, mid-60s, debt-free, no home, no auto, no credit cards, no nothing, to live averages about $3,500 to, say, $4,500. That's just to get by. That's just break even. So let's round that number up just for a second. At $5,000 a month, that means you need $60,000 a year. That means, again, if you're relying solely upon your investment portfolio, you better be at $1 million. $1 million at 6% withdraw pays you $5,000 a month. That's if that portfolio can stay at $1 million. Again, as the example I gave before I went to break. What if it drops to 900 or 800? What if we go through a 20% market correction? My gosh, that can happen in a couple days. That's why one of my pet peeves, I also tell people, when you leave your company, please don't leave your 401k behind. Hire a professional to manage that for you. Because it's very easy. A lot of people switch many jobs, of course, these days. And it's very easy to find out, oh, I left a 401k here, one over there, that type of thing. Consolidate them. Get them into one IRA rollover account. And especially the last company you're with, or if you've only been with one company, probably have a significant sum of money. Don't leave it in the 401k. And I'll do a show sometime of all the reasons not to. There are very, very few reasons to. I won't say it's an absolute guarantee that you should always roll over your 401k. But in most cases, you want to roll it over to an IRA. So know your number. You create a budget. And as I've always said, live on this budget. All right, we're talking our 1-year window to retirement. Live on this budget for that last year. Can you do it? It's always different in real life versus what's on paper. Maybe you thought you could live off of $5,000 a month, but in reality, there's no more fat to cut. You need $6,000 or $7,000, or maybe you need only 3 or 4. But wouldn't you rather know why you're still working and you can make those adjustments than once you retire? So point number 1, know your real number in that monthly number, that is, in your last year of working. Number 2, kind of ties into the same thing. Lock in your income plan. Understand Social Security timing. I just got my Social Security statement the other day, and boy, they really highlight apply for your benefits 3 months ahead of time. Same thing on Medicare. But know your Social Security timing. As I always like to remind people, they bumped up the what's called FRA, or full retirement age, a couple of years ago. So make sure you get your Social Security statement first of all. And if you don't have it, it should be coming to your email now. I don't think they even mail them out anymore. But if you haven't got one in a couple of years, go to ssa.gov, and we'll ask you a bunch of personal information to ask you a bunch of security questions, and then you can get on the email delivery method. But find out what that is, because you may think, oh yeah, I get to retire. Like mine for years was going to be, I'm 61 years old now. Mine for years, my full retirement age was 65 years and 10 months. Well, a few years ago, they bumped it up. Now it's age 67. So imagine if I wasn't aware of that and I planned on retiring at 65 and getting Social Security and supplementing my other income sources with that. I'm like, oh, wow, okay, I got to wait another year and a half or so to do that. So know your Social Security timing. Once again, I always get this question. Those days of playing all the games of start it, stop it, live off of hers, live off of his, all that stuff, those games are all gone. It's really simple. Know when your full retirement age is. And also, as a quick reminder, remember, folks, from full retirement age, whether, if you're like me at 67 or whatever, you are getting a guaranteed 8% increase on your Social Security benefit every year from age 67 to age 70. That ain't bad, right? Guaranteed 8%. I'll take that all day long. So again, if the cash flow numbers prove it, that you can wait a little bit to collect your Social Security, wait till age 70, you get a nice little boost on that monthly income. So know about your Social Security timing in that last year. Same thing on the pensions. Understand what your options are there. Many pensions, especially if you retire from some of our larger companies like NV Energy and formerly IGT, and some of the other big employers in our area, understand what those pensions are, right? Understand your timing of those. Do you want to take it single life? It's going to give you the biggest amount, but if you die, your spouse isn't going to get a penny. Do you want to take 75% joint survivor, where your spouse, again, you're going to get 75% left, but your spouse will continue receiving the same amount if you die? Do you go 50%? There's all these different options there, and you need to understand them before, again, you're ready to walk out the door. And then also locking in our income plan, the investment side. We touched on this a couple of weeks ago. Where's the investment income going to come from? What kind of investments? Are you going to just be drawing dividends off your portfolio? Are you going to be eating into principal? What's going to be your asset allocation? Are you going to have stocks, bonds, mutual funds, annuities, all these different things, insurance products, etc.? Where's it going to come from? But please, please, I beg of you, don't rely solely upon your stock market portfolio to provide your income. That is variable income. You want as much fixed income, like Social Security, like pensions, like annuity payments. You want as much of that coming in, because that way you don't stress about what happens in the market. If your portfolio drops 10%, 20%, which it will eventually, you want to make sure that monthly check is still coming in to cover all your bills and hopefully a little bit more. So that's why it's very important. That's why we put people through our risk cash flow program, where we break down their fixed expenses versus fixed income, variable expenses versus variable income. We can see exactly where those income sources are going to be coming from. Because remember, income comes first in retirement. Income comes first. Number 3, you need to stress test your portfolio. I touched on this a couple of weeks ago. How's your portfolio going to handle a down market? How's it going to handle a high inflationary market or economic condition? What's the longevity of it? How long will this money last you? Folks, now with our software that we all have, We can do what's called Monte Carlo scenarios. We can test that portfolio, stress test it. We can put in different assumptions like the high inflation. We can put in assumptions and say, yep, if you live to 82, you should have this amount. If you live to age 90, you should have that amount. There's software now that can answer all of these questions, but you need to overall stress test that portfolio. Because in real life, writing it down just on paper, that's the perfect world. We and I both know that never happens. So that's why, again, a income plan, portfolio plan, asset allocation plan, they're living, breathing documents. They got to be monitored and changed all the time. My fourth point, adjust risk before you retire. This golden year, this 1 year before retirement, is not the time for aggressive bets. I get this all the time from people. I'll review their 401k and they're in 2 or 3 different mutual funds, very aggressive allocation. I'm like, what are you doing? You can't do this. Yeah, but the market's doing great. I don't want to miss out. Once again, you have to always look at, if I lose money, how long will it take for me to recover? No one knows that. So why take the chance? Because with 1 year, if we go into historical cycles, again, where the market goes down for consecutive years, you don't have time to make that back up. So you have to change your mindset in this 1 year, and then when you're in retirement, it's not about the growth anymore. It's about the capital, the preservation of capital. It's about the income. Then it's about growth. When I write a financial plan for my clients, here's what I always tell them. There's 3 rules in financial planning. Or not rules, excuse me, priorities. Which one do you fall into? And those 3 priorities are capital preservation, growth, and income. Where are you? For most of my retirees, capital preservation goes right at the top of the priority list. Second is income, and as I said, third is growth. But yet when they were working, growth is always number 1, income number 2, capital preservation number 3. But the minute they walk out the door and they're now retired, we shift that priority. And you need to do the exact same thing. So adjust that risk before you retire. Last one I want to squeeze in before I go to break. You need to get serious about taxes. This is another big misconception people have. You've lived your whole life with taxes being taken out of your paycheck, probably get a nice refund each and every year. You're on your own now. One of the biggest surprises I see people have is when they go in and get their taxes done for the first time after they've been retired, and the accountant says, got some bad news for you. You got to start paying quarterly taxes. Well, what are you talking about? Well, you didn't have enough money withheld. You made too much money. You didn't have enough money withheld, from your IRA distributions, et cetera. Enough money for taxes. So there's a whole nother cash flow planning issue. But luckily, again, they've bumped up the RMD, to age 73 now, so that helps. Roth, conversions, that's always something that we have to factor in. How much do you want withheld? Most people never know what they want. I always tell them, talk to your accountant. Let them know what the portfolio income that we've said that you're going to be generating, what that's going to be, and see if they want your withholdings adjusted. Are you going to be at 20%, 25%, somewhere in between? Who knows? But it's better to know now than to get that big tax surprise because, again, you're going to be on a fixed budget coming in, right? The last thing you want is, like I said, the quarterly tax one is what always gets people. And also not planning properly for the RMDs. Those are the 2 biggest surprises. So we got to get serious about our taxes. All right, when we come back, I'm going to talk about healthcare and Medicare planning in our topic, 10 things you must do before retirement, the 1 year window. Let's wrap it up with Kristen Snow right now, Traffic Center. Hello, my dear. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. It's been talking about 10 things you must do 1 year before retirement. All right, I'm on to my 6th point. Understand healthcare and Medicare timing. Like I mentioned a moment ago in regards to the Social Security side, same thing on the Medicare. You have to apply at least 3 months before you're ready to retire. I've had people wait until they're retired, and then they have a gap, right? They're no longer covered by medical at their job because they've now retired, and therefore here comes the big surprise that they didn't file in time for Medicare, and they have a gap there. That can create all kinds of unnecessary anxiety and frankly, financial risk. So know what your enrollment windows are. Know what your coverage gaps are. Are you going to need the various parts of Medicare, right? Part D and so on and so forth. And then here's the big shock. What are your out-of-pocket realities? How much is it really going to cost you? Those things can add up, especially if you have medical conditions. So we need to understand healthcare and Medicare timing. Remember, this is a planning issue. This isn't paperwork. This is something that has to be done in this last year. Number 7, we need to eliminate debt strategically. Remember, not all debt is bad, right? A mortgage is not bad debt if you got a good mortgage rate, right? Hopefully you're owning an asset that's going up in value. You're getting some tax deductions on the interest, so on and so forth. But what about bad debt? I call bad debt the stealer of freedom. Had a phone call again with a great couple today, years away from retirement. They're just, early 50s, basically debt free. Figured out a way for them to pay off their house. That was their only debt. They're going to be debt free for the next 10 to 15 years of their working life. The cash flow is going to be significant for them to invest into retirement accounts, after-tax accounts, etc. So remember, get out of debt. This should have been done not in this last 1 year because it's probably not enough time, but in your 5-year retirement plan, that's when you need to be focusing on getting out of debt. No need to have the credit cards, right? We all need credit cards. Great. If you're going to use it, pay it off. Make sure you got the cash flow to do that. But if you got to still have a mortgage, let's make sure that, everything is lined up. Are you in a competitive mortgage rate? Have you done asset protection strategies for the equity that you have in your home? Those type of things. Number 8, simplify your accounts and your beneficiaries. Right? Retirement, you want it to be fun. You don't want to be stressed about paperwork. You don't want to be getting, 10 different brokerage statements in your email box and old 401ks hanging out there. This is the time to consolidate. Make your life simple. And I always tell people there's no reason anymore that you need to worry about, not having all your eggs in one basket, as people used to say. Right? I get people come to me all the time and they'd go, I've got, whatever, pick a number, $500,000, $1 million, and I'm going to segregate it among 4 different brokers because if one of the brokerage firms goes out of business, I don't want to lose all my money. Folks, those days are gone. All of us have more insurance than any amount of money any of you have, literally. Brokerage firms now are custodians. They have unlimited amounts of insurance. If anybody fails, you're going to be protected. Then, of course, you have the lovely SIPC, which is a form of government insurance, which don't get me started on that. But consolidation can be done. And it really, let me tell you, I'm not saying this to, for selfish reasons. When we can manage a client's entire portfolio and not be a piece of, 2 or 3 other advisors, I can tell you, you're going to be so much happier because you've got one person that can make sure everything is working towards your goals. Because I guarantee you told advisor 1 a certain type of goal, advisor 2, 3, and 4. So you find all these advisors are doing different things. Many times they may be owning the same things because you're not going to be a quarterback. You're not going to go, hey, is Sanchez owning the same things as, Fred Smith down the street? Again, you don't need all that. So consolidate, make it simple. Second thing I want to mention under simplifying, the beneficiaries. Now's a great time, right? This should be something you're doing annually, but now's a great time to review those beneficiaries. Do you have your money going to the people that you want it to? And are you going to avoid probate? Which brings me to my 9th point. Now is the time. If you don't have an estate plan, call us. If you have a trust, call us. We'll review it for you. Do you have the proper powers of attorney, the financial, the medical directives? Now's the time to make sure all of those documents are in line in this last year. And finally, I'm going to leave you with this. If retirement is a year away for you, or let's just say your loved one, a spouse or something, folks, this is a window, a very small window, where thoughtful planning will make all of the difference in the world. You want to go into retirement calm, confident, collected, knowing that a plan is in order and that you've got someone overseeing it so you can go live the best years of your life, which is retirement. If we can be of service to you, please give us a call at our office, 775-800-1801, or online at sanchezgaunt.com. God bless. Have a great afternoon. We'll see you tomorrow.
Jon Sanchez is a registered investment advisor, and the opinions expressed by Sanchez Gaunt Capital Management, LLC on this show are their own and do not reflect the opinions of News Talk 780 or its parent company, Cumulus Media. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance.